I will be working through exercise 423, which is preparing the closing entries for the temporary accounts for the Faro Company. Before we get started, I will remind you that we only close out temporary accounts, which are revenue accounts, expense accounts, and our dividends accounts. You do not close out permanent accounts, which are asset and contra asset accounts, liability accounts, and stockholder equity accounts. So to start our assignment, the first thing we will need to do is to close out the revenue account. You will notice that we have two revenues. We have service revenue and rent revenue. Make sure for this assignment you are using your numbers from the after adjustment. Our service revenue, which is a credit in the credit account, we need to debit to zero it out $33,130. We'll need to debit our rent revenue for $13,540. We will close these accounts out into our income summary. So we've totaled these two numbers to get our number here of $46,670. The next thing we will close out is the expense accounts. We will close our expense accounts out into the summary account. Our expense accounts are all in debit accounts. We will need to close them out by crediting them. The expense accounts show as salaries and wage, supplies, rent, insurance, and depreciation expense. I've entered them in the order that they were presented: salaries, supplies, rent, insurance, and depreciation. As you total the expenses, you will close them out by debiting the income summary. That was a total of $34,840. The next thing we will do is to close out our income and loss. So we want to close out the income summary, and we received our number, our total, by subtracting $34,840 from $46,670. That gave us a credit of $11,830, so we need to debit $11,830. We will credit the retained earnings account. The last account we need to close out is our dividends account. When you come here, you will see that our dividends are $2,820 that we will need to credit to zero out, and we will close those out to the retained earnings. This is the last step we need to do, and you would notice if we were doing this from a company that we had done our statements from, that these numbers are the same from our income statement.